everyone. It is Evan here from the Trade Risk on Friday, July 14th, 2023. Hopefully everybody's doing well out there. Welcome back to another edition of Stock Market Weekly, episode 690, where we break down the most important trends, price action, and noteworthy moves across financial markets. And we're going to jump right into it today with our top takeaways, headlines, and points we're going to be going over in this video. Latest data shows easing inflation pressures. That is the big story this week. Now, there's lots of ways you can read into this. Some folks will disagree. Are you looking at core? Are you taking out core? Bottom line is market seems to like or believe the fact that inflation is easing here. We saw this very clearly demonstrated in interest rates. So if you recall, in fact, the title of last week's Stock Market Weekly episode was, Will the Spike in Yields Halt the Rally in Equities? And so last week, the market was digesting some strong economic numbers, right? The economy was doing better than expected. That caused some concern, at least in the pricing of interest rates. Maybe the Fed's going to stay higher for longer. The economy's pretty strong. And now this week, we've got this other opposing force, which is inflation. And inflation seems to be easing here. And that's what the market's kind of pricing in, grappling with on both sides. We saw yields fall sharply this week and sort of erasing a lot of that panic and worry from last week. So who's right? We'll see. We're going to continue to obviously get data in both directions here, but that was sort of the big story of this week. Earnings season also getting underway, mostly just financial stocks. We got a handful of banks, the big money center banks. We'll look at a few charts later in this video. We did get a breath of fresh air for crypto. It's not a crypto focused show, but the ruling out there for Ripple that it was not a security, or at least, some details there on how that gets broken up, but largely speaking, not seen as a sale for securities, which basically gives a little bit of optimism that, well, if Ripple's not a security, then a lot of these other cryptocurrencies on exchanges are not either. So that was positive to see. Nasdaq 100 is about 7% from its all-time highs. Nice recovery still in progress. And we had a very big down week for the dollar index. Kind of ties into the inflation reading that we talked about earlier, and yields coming down and all that fun stuff kind of tied together. So we're going to talk about all of this and more in just a second. Stay tuned. All right, here we go. We've got Warden TC2000. That's a charting platform we are using for these videos. If you are a TC2000 subscriber, if you're thinking about a different charting platform, check out our website. We've got lots of these scans, custom indicators. We write code for traders every single day. So check us out. We got lots of resources, tutorials, education for this platform. So let's get into it here with the breakdown of just the indices this week. You can see bright green if you follow my cursor up here, 2.5% for the S&P 500, 3.5% for the Nasdaq, 3.5% for the Russell 2000, 4% international outside the United States. It was a good week out there for markets. If we look at volatility down here, things coming out, volatility coming out of the market, dropping by about a point in the VIX, Nasdaq vol, about 1.5 in S&P. VIX 13.34 going into the weekend. Here is the overall trend for the week. This is a 5-day sort of line chart of all of the major indices. You can see we started the week basically in the bottom left, finished the week in the top right. We did get a pullback here on Friday, or a little bit of a rejection off those highs, but generally speaking, very, very positive week here for stocks. Now, if we go to the sector breakdown here, spider sectors sorted on the strongest to weakest. 1 week returns, consumer discretionary at the top of the list, 3.25%, followed by communication services, followed by technology, 3% basically across the top three leaders this week. On the downside, everything was green, just FYI. Everything did close green this week in terms of spider sectors, but on the downside, energy, staples, financials, they were the underperformers this week, but still up about 1 to 2%, not too shabby. 1 month returns, everything's positive. 1 year returns, you can see some big double-digit gains in most of these sectors. Here is the overall trend. So this is using one of our custom TC2000 Smart Trend Filter Indicators. Also have this available for TradingView users on our website as well. But basically here measures price and volume, spans across time. It's got some price action relationships to kind of smooth out the noise, but really color-coded kind of stoplight system here. And you can see that for the most part, we had, again, just constructive bullish action across the board. Not a lot of the states changed here, so we were bullish across the board. Remember, we did have technology, for instance, last week. Remember, we started to print those yellow signals, those little yellow warning signs that, you know, in the way we sort of interpret it is, it's not a get out there and sell everything type of moment here. There's a yellow indicator for a reason. It just basically means take a pause, you know, look a little bit closer. Maybe you're lightening up a little bit, but generally speaking, we like to follow the preceding signal here, which is in this case bullish. And you can see we did get basically a transition up confirmation back into bullish here for tech, and you can go right down the list. Everything pretty much optimistic. Healthcare's trying to turn up, so this has been bearish over the past week, trying to turn up a little bit here. Utilities starting to turn up as well. Staples look like they want to start turning up, so this speaks to basically that sort of more broad-based participation out there across markets. Now, speaking of market breadth, as this loads here, bottom left, this is our plot of NYSE stocks at 52-week highs minus the ones at lows. Really, it's plotted over one another, and you can see basically good things are happening as you see more big green shoots here. So as you see more expansion, more stocks hitting 52-week highs like we are over the past couple of weeks. You can see we had a nice spike up there on Thursday. We cooled off a bit on Friday, but still very constructive action there, still underneath the hood. Would love to see this expand even greater. Going all the way back, you can see we had readings up to in this chart. And so everybody calculates these numbers a little differently. I don't want to get hung up on the specific number, but if you look back at this rally in here in 2020, 2021, we did have a lot more stocks hitting 52-week highs. So there is still more room to go on the upside here if this bull market is going to continue. And I know I said a very dangerous word there. Some people still think it's a bear market. It doesn't really matter. It sort of depends on definitions, but we just have more room to expand here to get more excited if that happens. Now, in terms of stocks over 50 SMA, 200 SMA, you can see mostly still trending higher there. That is constructive. And if we look at our dials here, you can see large percentage of stocks, 80 to 90% were up this week. Volume not too high, but generally speaking, a pretty supportive week here for market breadth. Now, if we want to go to IBD, so IBD's top 10, so they've got the IBD 50. I pulled the top 10 here. IBD is a sponsor of the show, so shout out to them. You can support us. You can support IBD. There's a link in the description to their digital subscription, and that's where I'm pulling these 50 stocks from, or the 10 stocks in this case. And you can see on the week here, it was a kind of a mixed race. So we had DraftKings at the top of the list here, up 14.5%. They've been on fire over the really course of this year. And also we had, ALGM up double digits as well, but you can see there was definitely some cooling off here. Carnival, Royal Caribbean, they have been on fire recently as well to the upside, so they finally started to pull back a little bit, and you can see just a little bit of disparity here in terms of IBD's top 10. So check out that link in the description if you want to get access to their list. They update every single week. Now, if we make our way over to commodities, you can see silver was the standout this week, 7.93%. That's a huge week for silver. You can see if we look at our smart trend filter, starting to transition up, starting to resume its uptrend here. It's been in this pullback mode since really the beginning of May, and it's finally starting to get its act together here. Big week. Same thing with oil, up nicely. We talked about that consolidation last week. We'll look at that chart in just a moment. DBA up nicely. Gold was up nicely. Copper flat. Natural gas down a smidge, and dollar index 2.16%. That's a huge move for the dollar to the downside. That obviously, just naturally supports commodity prices. Commodities denominated in US dollars, excuse me, tend to do well when you have that type of outsized move. Now, this chart also, which is the top of the video, we talked about interest rates, yields. So you can see everything across the board fell this week. So constructive there, yields down, bond prices up, move index down. We're still largely sideways here in the big picture. So again, if you look at, 30-year treasury yields, 10-year treasury yields, we're still mostly in this kind of holding pattern over the past 10 months. Since September of 2022. So there's not been a big trend change, but the big spike we saw, that acceleration higher that we saw last week, certainly turned around, went the other direction, and we're now sort of firmly back in these old ranges. Let's take a look at price action now. So if we started off here with the S&P 500, here is the weekly chart. Here is the roadmap we've been looking at. And again, as we've been talking about, the S&P 500, really all of these indices have been very methodically just working off of these levels, cleanly sort of trending from level to level. S&P 500 right now is in the middle of two big levels. 4,300 to the downside, so that's below us, and we got about 4,600, which is the approximate January, February, March 2022 highs. Still think that is the destination, that is the target, that is the big kind of magnet above us. We've talked about this over the past couple of weeks. We continue to march up to that level. Of course, nothing is going to happen in a straight line. There's going to be some zigs and zags in between, but generally speaking here, very constructive week, all, Monday through Thursday. Friday, again, we pulled back a little bit. Maybe we, follow through a bit on Monday, but we are still seem to be in motion to move back up to this 4,600 zone. We do have earnings season, so we've got some catalysts on deck. This could get thrown off, right? I don't want to be a perma bull by any means, but we are still in an uptrend. We are still, above relevant, big, key, horizontal levels that I want to see us hold above. So until and if we start breaking above 4,300, that probably is the big intermediate term level that would flip me more neutral to bearish on this market. But we're a decent ways away from it. So until that changes, I still want to kind of respect the trend here, continue to, participate in this market as best I can. Of course, I don't really play the S&P 500 outright. I rather pick individual stocks that just have more, attractive reward to risk ratios and sectors and so forth. But S&P, just as a proxy, doing pretty nice. Now, if we move over to the Qs, you can see that we did break above 372 this week. We talked about this tight range last week, 372 on the upside, 358 on the downside. We broke through on Wednesday, continue on Thursday, and you can see a little bit of a reversal here on Friday. So same thing for the Qs. Again, you could use this 372 breakout as long as we're holding above that. I think you need to be a little bit optimistic on this market. These Qs have already broken above the January 2022 highs here, February, March 2022 highs. So they are approximately 7.5% from their all-time highs. That seems like the next big spot to get back up there to all-time highs. Don't know if we get there in a straight line, of course, but that's what I'd be watching here as the next upside big target, 405. And again, the Nasdaq has had a really, really good run this year. So, I don't know if it's just going to march there so easily after such an extended move, but that's what I'd be paying attention to on the upside. Does seem to be a good amount of air in between these two levels. So that's, I guess, what I would say on that. If we start rolling over below 370, you get some, a nice little tactical sort of sell signal, reduce risk signal. If we start breaking below 370, that's the way I would view it. Russell 2000 this week, you can see making progress here, 3.7%, getting back up to the top end of this very big range here, going all the way back to January of 2022. This is a pretty important level. We haven't hit, or really been able to break above 195 or so. We stayed up there for a couple of days back in early January and then back in July of 2022. So that's a big breakout zone for this market. Look at the monthly chart on this Russell 2000 here. Let's clean it up. So you can see just how much time we've spent. This is a monthly bar, so each bar represents 1 month of trading. And you can see just how long we have gone so tight, so sideways here in the Russell 2000. So lots of fuel kind of picked up, just being, accumulated in this zone. Big breakout area above 195, 196, big gray area. I don't want to get too exact. And then on the downside, 164. So we'll see how that resolves, but good progress there for the Russell 2000. So let's get into some of our other markets. Dollar index, this is the big one this week. Take a look at the weekly chart. This is just a big rollover here, 2.16%. That's a big move. Now, again, you could make the case here that structurally we didn't really change a whole lot. We've kind of have been, slogging it sideways all year long. between, call it 2730 to 2860 in this UUP dollar index ETF. So until and if that breaks, maybe it's all noise, but still noticeably moving to the bottom end of this range, and certainly doing it with some speed. Now, that also certainly helped USO, and we talked about USO last week. So remember, we talked about the fact that this has been coiling up in this nice tight sideways range. It was starting to lift up and make new closing highs. It is now continuing on that progress this week. It was up 2.46%, and it's now hitting this upward, the upward bound downward channel that oil has been, falling in since 2022, middle of the year. So this is some pretty big levels for oil. Bulls getting pretty excited here. Again, it was pretty extended, getting into some big levels prior, supply in here as well. Maybe it takes its cues on the dollar. We'll see what the dollar does next week as well. But getting a little bit encouraging here for the longer term oil bulls. We'll see if they can continue. Now, also interest rates, yields, right? So we talked about the fact last week how they rolled over hard. They were back down to the low end of the range. They were oversold. And this was this V-shaped recovery this week. Again, fueling mostly off of the inflation data that we got this week, the fact that inflation was cooling off, and this certainly gave a nice rise to bond prices. We'll see if this can continue next week. We talked about those competing forces at the top of this show. And silver, big move here for silver, 7.93%, big move, going to multi-month highs here. Very impressive. Daily chart, you can see just a series of gaps, big volume coming in. A little bit of a tough chase, of course, but structurally, doing, some good work here, breaking to the upside. Gold, same thing, just not as pronounced. Basically, we had 1.56% to the upside, multi-week highs here, but, certainly has more potential progress. But I like it. I like the structure, generally speaking, of gold here as it tries to resume up. Last but not least, if we take a look at some of the financials, so we had financials starting to report earnings on Friday. This is what the XLF looks like here. Bearish engulfing day. We started the day up, gapping up over yesterday, prior 2 days highs, and then we proceeded to sort of sell off into the close here. We did have, JP Morgan report earnings. It was more of the constructive side here, still up 0.6%, didn't quite close at the highs, big volume coming in, but certainly the market enjoying sort of the move here and report from JPM. If we take a look at Wells Fargo, you can see a little bit, maybe a little bit more pessimistic, but again, opening high, closing low. I think Citigroup, though, this is kind of the order here of, JPM kind of at the top of the list, Wells Fargo in the middle, Citigroup here, certainly not the favorite. Heavy volume, big bearish engulfing bar, closed down 4% on the session. There were some other bank earnings out there, but basically, you can see from some of the big three there, just the initial reaction as the market sort of parses through this. Of course, we've got earnings season that's going to heat up next week, really the week after that, until we start to get into some more tech earnings. But keep an eye out on that. Check your earnings dates if you're holding any of these individual stocks. And I think that's it. I think that's all I got for this week. So I'd love to know, as always, what are your thoughts going into the weekend? You've got these competing forces here with inflation coming down. You believing in that? Have yields topped here? Was last week sort of kind of a fail fast type of signal here, or do we have higher for longer, and is the Fed going to keep things up? I think that's the big story as the market kind of grapples with interest rates and yields and pricing in securities accordingly. So let me know your thoughts below. Hopefully you enjoyed the video. Have a great week out there, and we'll see you back here next weekend. Take care.